Good morning, everyone, and happy Monday. We have a lot to talk about today. We'll start off with the market overall, which is definitely taking a hit. We are definitely seeing some more profit taking right now. A lot of stocks are just trending lower in pre-market, and it's just not looking the best. We also have some pretty big news with ZNGA. They just got bought out by TTWO, and ZNGA is flying in pre-market. They're up like 50%, and TTWO is definitely down a little bit, but we also are going to cover Bitcoin in a little bit. But either way, we got some great news today. Tom, what are you watching for this week?
Yeah, Tilray actually reported earnings today, and they actually did pretty good. So maybe the marijuana stocks will start to turn around here. We can see that their revenue increased 20% from a year earlier on stronger demand, but their sales did come in below analyst forecast per CNBC in this article here. And then we also, like you said, Zynga is doing very good with that Take-Two Interactive purchase. That's going to be a great, I think, thing for Take-Two. Obviously, Zynga's not the best. I know, Mike, me and you were just talking about it. They're actually, their last earnings report was negative. So hopefully Take-Two can kind of turn it around for them. And, you know, Take-Two is a pretty reputable game company. So hopefully they can. And, you know, that's just crazy to see this type of movement here in pre-market, especially out of stocks like Tilray. I was not expecting them to do this good. You know, they've been doing pretty bad over the past few months, and it's just great to see that those numbers coming in a little bit better than expected, even though the sales were worse.
For sure. So related to Tilray, it has been struggling a lot over the past year. Everyone knows that, but it gets in like these trends where sometimes it just straight up explodes. So definitely keep Tilray on your watch list. Tom, part of me is just tempted to like get like an out of the money call on Tilray just for the hell of it, because it can explode. Of course, it'd be a complete gamble, but with earnings plus it's up 10%, plus it's at a really low level, it's just like part of me is tempted.
Yeah, me too. I mean, it seems like a pretty tempting trade to say the least. The implied volatility is pretty high, but like you said, this stock can start to run like. Honestly, like if we go look at it on like the max weekly chart, and we go back just a couple of years ago, we can see this stock ran from lows of, $5 all the way up to highs of $66. And, if we look at it on the first run, it ran from 24 up to 300. So yeah, it definitely goes in those types of big runs when it does, Mike. And hopefully this is the turnaround. We've been waiting for some good earnings out of these marijuana companies for a long time. And, if we get good earnings, then maybe they talk about legalizing it here over the next couple months. These stocks could do pretty damn good.
There we go. All right. So one other thing I wanted to talk about was ZNGA really quickly. Looking at ZNGA, so it's up 50%. But one thing to keep in mind is that this setup will not be the same as your normal setup in the sense where like it can just keep on running. Since ZNGA is being bought out, that means that there is a top somewhere. So let me go back to CNBC. Tom, do you have the part where it says TTWO bought them out? I just want to see.
Yeah, I believe so. Let's see if I can get that back up here.
Perfect.
Yeah, it says TTWO bought them out for $9.86 per share in cash and stock.
Perfect. So we can see implying a total deal value of like $12.7 billion. So essentially, if we go, let me go to FinViz really quickly. So $12.7 billion. Let me go to ZNGA. $12.7 billion. Oh, it didn't update on FinViz yet. But either way, I think that it was like $9.86 a share. What that means is like basically ZNGA might linger around anywhere like slightly below $9.86 a share, and then they'll just linger around that level for months. So even though ZNGA is up 50% today, don't expect this one to like explode past $10 or $11 or $12 because that would make the company worth more than what they're even being bought out for. And you just don't want to do that. And that's why we're seeing implied volatility fall, because there's going to be less volatility in the future.
Yeah, definitely. And it's just cool to see Zynga like up like this. I know it's going to be a pretty tough play here, but yeah, I mean, that volatility is going to get crazy, Mike, especially like, as we get more towards the actual buyout date. I don't know what the date actually is yet based on that article, but looking at it, I just can't wait for the deal to go through. We've been seeing lots of companies, Mike, make these deals, and then the deals get scrapped. Like I remember DraftKings had it. I can't remember. I think another company was trying to buy out Pinterest. Maybe it was PayPal or somebody, but I know Pinterest was on the verge of being bought out, and they kind of had a similar move to Zynga here on the chart to the upside. And then they ended up tanking off over the next few days as that deal got scrapped. So I really hope that the deal ends up staying through with this one, and I think it possibly will.
For sure. So looking at the market so far today, it's not looking good. We have the SPY breaking lower. Other stocks are definitely trading lower. And yeah, Tom, I mean, what levels do you have for us on the SPY?
Yeah, the SPY is not looking good. I'm honestly eyeing up this major support down here right around $460 even. I'll be honest, the way that the SPY was kind of sliding off to the downside last week was not looking good in my opinion. We stayed under a ton of these SMAs. We failed to break out, and we just really failed to break back up above that 470 resistance level. And whenever we honestly touched that and confirmed off of it and started moving down, I figured we could start to have a pretty good break of support. And it looks like this morning in pre-market, we broke that low of Friday around 465. And ever since that break, we've been pretty much straight down today. And yeah, it's just not looking good. Lots of stocks on my watch list are mixed. I will say most of them are in the red today, though, and it looks like growth is getting hammered once again, unfortunately.
There we go. Yeah, so tech stocks are in growth, like you said, are definitely taking a hit. Not looking too good so far. Even the chip stocks are really struggling, like NVIDIA and AMD. I mean, NVIDIA's down 4%, AMD's down 3%. It's looking pretty crazy. So that's very interesting there. Powerhouses are down, like Apple, Disney. I mean, Queb and like the China stocks were looking really good this morning, but even those just got like rejected right now.
Yeah, they really did. Unfortunately, let's see Baba. Yeah, Baba is coming back. Queb's coming back. FXI is coming down. Yeah, it's not looking good. I know Baidu was looking really good on the daily chart off that support down here. So maybe they'll hold that 135 support. I know that they had a pretty good pop last week, and maybe they're just consolidating a little bit, but it's not looking good with the SPY moving down. That's for sure. Man, the SPY and the overall market is just, it's just a little scary right now. We have everything going on with the feds and, all these inflation numbers and everything like that coming out. And talking about inflation numbers, we have more of those coming out this week. So we'll definitely be hitting those a little bit throughout the week as they're coming out.
For sure. And then let's shift over into Bitcoin really quickly because we're seeing stocks get destroyed, but even the cryptos are taking a huge hit. Bitcoin is below 40K and it's really struggling. It's just, there's a lot of profit taking right now, Tom, and Bitcoin has been in a downtrend ever since, I guess you could say, the beginning of December. Like, it's been basically nothing but just straight downwards movement. Yeah, it's just not looking good. And even if we shift over into Ethereum really quickly, yeah, that's even taking a huge hit.
Yeah, it is. I mean, both of them are just not looking good right now. It's just not good. I mean, obviously, sometimes people say that, Bitcoin moves like with the overall market, and it looks like as of right now, it might be a little bit, but, it was kind of moving down before the market was too. So I don't know what to think about Bitcoin here, Mike. It just fell below $40,000 though. I know this is supposed to be a pretty big support everyone's been talking about. So if we fall below this, it might get pretty bloody here over the next day or two. And to be honest, Mike, I think it looked like a bit of a dead cat bounce on the daily chart with those two green candles to end the week last week. It's looking pretty scary now with the way we ended up falling below that. And with, like you said, it's been on a pretty bad downtrend for a while now. And man, it's just when I look at Bitcoin, it's just looking so bad off this $52,000 resistance. I hate to see it move down in such a drastic way, but I will say the technicals are setting up to the downside. And to be honest, it looks like a pretty good short play, if anything.
I'll say the biggest opportunity is just going to be buying, either dip buying Bitcoin, dip buying Ethereum, dip buying growth stocks, dip buying some of these chip stocks when they get lower. Like, we're seeing a lot of selling pressure right now, and I know it just sucks short term because it's like everything's falling, but there's just going to be so many buying opportunities, and there even are a lot of buying opportunities right now where it's like, I hope people are like setting cash on the side to take advantage of some of these dips.
Yeah, I hope they are too. And if we go look at Bitcoin, the last time they had a major dip, we fell from 20,000 all the way down to like $4,000. And that was an insane drop whenever we saw that happen. Of course, the last time we dipped, we fell from like 64K down to 30K, and then we went right back up. So we about halved right there. But on this one, we fell a lot lower. And, if we start to fall like below some of these major supports, like Mike said, it's going to be a really good time to buy some of these cryptos. Like with Bitcoin, honestly, like if we fall below this 40K support, we might start heading back down towards 35K and then 30K. And to be honest, that'll be a great pickup, I think, down there around that 30,000 support if we're able to get back there again. But it's going to be a long-term play, I think. Obviously, in the short term, nothing you could do except for play anything to the downside, I think. But, like Mike said, I would definitely put some cash aside and just wait to pick some of these up. And, even the growth stocks, like you mentioned, Mike, like we could still pick up, DraftKings and some of these stocks at these nice low levels even now.
True that. All right, so then we have a bunch of great information related to Zynga and TTWO by George. So thank you for that. Vicky's asking for some levels on VIAC. So Tom, what are you seeing?
Yeah, I really like this news with VIAC this morning, but they are falling back down a little bit. They had an upgrade by Deutsche Bank from hold to buy, and that's pretty good usually, especially from a big reputable bank like Deutsche. But looking at VIAC on the daily chart, Mike, I really liked how they broke out up above this resistance of 3250 last week. I had that posted there for quite a while. We broke above it, and then we actually tested it, and then we had a huge green day on Friday. So I like the setup on VIAC to the upside. Personally, I think it's more of a play for shares here. I will say, as far as resistance levels, we're getting pretty close to a resistance right around, I mean, I'm seeing a big one like right around 3670, maybe 3675, right around that high of day today. And if we're able to break that, I think it'll be pretty good, Vicky. But to be honest, that major support down there, right around 3250, is going to be the main thing I'm looking at, and then maybe 34.
Sounds good. Alrighty, and then we have Johnny Leverage saying Nvidia and AMD puts with a question mark. So I like them. I've been playing chip stocks to the downside for the past couple of weeks, and now they're really just finally starting to fall off the board. Which honestly, I've been waiting for this for like at least over the past month. But I do like them. Just one thing you have to be really, really careful about is the strike and expiration you choose, because these puts on these chip stocks are really expensive right now. IV's pretty high, so it's like you have to be really, really selective. Like, don't just buy a very far out of the money put that expires in 2 weeks, because you will probably get burned doing that. So you'll want time. You'll preferably want to be as close to the money as possible. And then, honestly, I feel like the best bet would be like a put debit spread.
Yeah, that'll probably be the best way to go, especially like in the short term. And looking at these stocks, Mike, like I love the movement to the downside. Like I know that we've been talking about these stocks falling for a long time, and it's finally now starting to play out. Like in AMD's case, we're starting to break below that 130 support. That's going to be huge for them. They've been actually doing some pretty good technical moves lately, like lower highs. They've also been falling below like the 1,000 SMA, which is not a good sign. And it's just a lot of things are starting to point to the downside for these chip stocks, especially like NVIDIA too. Another big one, falling below support. And whenever we look at the daily charts of these, Mike, like I feel like NVIDIA is getting close to their 250 support. AMD is getting close to another support around 120, but I feel like that they could still go lower. Like I know that they've been falling here for the past like month or so from 164 down to 127, but I still feel like that they could have a little bit more movement, and we might go down for like maybe the first quarter or two here.
Yeah, for sure. And then another thing is just a rotation, Tom. Like I know we've been talking about it forever, but obviously we see rotations every couple months or so, and we might see, or I think we already are seeing money flow out of some of these larger tech stocks like AMD, Apple, Microsoft, Tesla, and things like that, and flow into maybe some of these growth stocks or even some of the value stocks that haven't really exploded yet. And I think we're already seeing that. And I think that it's pretty obvious just by looking at a chart of like you have Boeing versus Apple or something like along those lines.
Yeah, definitely. Like if we look at Boeing over the past couple of weeks, they've pretty much been going straight up from like 185 straight up towards that 220 resistance. And then if we go look at something like Apple, they've been kind of consolidating around 180 and not really doing too much the past couple of weeks. So that does make a lot of sense. And it looks like the transition is starting to happen here. And I hope it happens sooner than later. Like we've been waiting for a long time. And honestly, like today, I'd love to see these stocks like DraftKings and Roblox, Matterport, Neo back in the green, but it's just it looks like that transition's not happening, at least back into the growth stocks. But these value stocks are still on fire, Mike. Like I know I've been talking about Kraft Heinz quite a bit. I mean, man, they've been pretty much straight up, just like Boeing, ever since that 33 support. They're looking good. We have CLX, which is Clorox, with another nice green day today. I mean, they're not up a ton, but you can see these stocks have been faring pretty well and moving pretty well off these bottom supports.
True that. All right, we have George saying Lucid doesn't care. Yeah, I mean it's holding up, especially on a day where one, the market's getting clapped, but also two, like growth stocks are really taking a hit. So Lucid is holding up pretty well. They're only down like 0.5%. Their IV is rising, so it looks like investors are definitely anticipating more volatility soon, but they're not looking bad.
Yeah, they're not looking bad at all. It looks, now over, of course, as soon as we pulled it up on the 1 minute candle, we had a huge move to the downside. But yeah, I feel like that it's been looking pretty good today, especially compared to the rest of the growth sector, like you said, Mike. I like it personally. I think this is a pretty good company for the longer term. I know a lot of people don't like them apparently, but I will say though, I think they've been having some pretty good movement, and the way that they won Motor Trend's Car of the Year, I thought was pretty good, but obviously we're going to have some issues with production this year, to say the least. Like, man, Rivien came in with those bad production numbers from last year, and I'm a little worried for some of these companies this year, Mike. Like, I want to say that Lucid will do good, but, obviously it's just going to depend on the production, and we'll have to see if they can pump out enough vehicles to meet those pre-order requirements or not.
True that. How is Rivien doing?
Rivien, Rivn. Not good. It looks like they're actually back on the downtrend. They might break below that low of last week pretty soon. They're actually not looking good. If we look on like a 5-day, 5-minute chart, they had that terrible move to the downside last week, and it looks like they're just heading back towards that.
Sounds good. All right. Looking at some of these comments, we have Hunter saying if the Feds didn't play make believe with inflation for a year, we would have been better off right now instead of having to play catch up to handle it. So I know what you mean, and it's kind of interesting because I know there was a lot of talk with inflation and rising rates and tapering over the past year or so, and like, what we saw with the FOMC minutes, it wasn't really anything like groundbreaking or anything like jaw-dropping, you know what I mean? Yet the market still tanked off big time. So it's just like, it goes to show you, like, sometimes the Feds can even say we're going to do this or that, and then they do it, and then the market's like, what? Why are you doing that? And it's like, the last 5 minutes was not anything absolutely crazy, yet everyone freaked out about it. So it's kind of weird.
Yeah, it is kind of weird actually, and like looking at the SPY and just all that movement with the Feds last week, it was just kind of crazy to see the movement down that much. Like, I would have thought, Mike, that it would have moved like this more of at the last FOMC meeting rather than at the minutes. But I guess the minutes kind of showed what Powell didn't say. I guess Powell, like we say, he's a good cheerleader and he's good at keeping the market up, but kind of like what Hunter pointed out, if we didn't play a year of make-believe, it might have been a little bit better. Or I should say we didn't play a year of transitory. I don't know how long he was saying that for, but I remember I loved it how a couple months ago he was finally like, you know what, it's time to retire the term transitory. Like, he's like, I guess it's time to scrap it. I guess inflation is staying around after all.
True that. All right. So we have Kevin mentioning DraftKings, good old DraftKings. So it's definitely down today. It's down 3%. It's not as bad as some of these other companies, and DraftKings is coming up just a little bit. IV's rising, shows volatility is expected over like the future. But yeah, I mean, it's not doing great, but it's not doing terrible either.
Yeah, I would agree, and I think that with how they came out with their sports betting app in New York over the weekend, I was really hoping for some better movement today out of DraftKings, but obviously the overall market and the rest of the growth sector is probably keeping it down a little bit. So always keep that in mind. I feel like that they'd be doing a little bit better if the sector was up.
No doubt, and they were looking great on Friday and after hours. Like I know you texted me, Tom, and it was looking great. Like it was getting really close, like $28. But like you said, I think the market really just kind of slowed down their momentum this morning.
Yeah, it did. And, if they would have broken above 28, like I said in that text, I thought it was looking so strong. If they would break 28, like if we look at them on the daily, I mean, man, I thought they could have had a pretty good like run up towards 30 or possibly even a little bit higher today. But yeah, unfortunately, they ended up down in the red again. And I'll be honest, like the way they're holding up here today, if they end up forming a pretty good support down here and if they could just linger around, maybe they'll set up pretty well for tomorrow.
Yeah, we shall see. All right, so we have Johnny Leverage saying, I got in the money puts for February 18th on AMD and NVIDIA, trying to protect my shares. Very smart, very, very smart. Trying to protect his shares. It looks like he has a good strike and expiration. Awesome stuff there. Then we have Keisha saying, KR and CPB have been printing money. So KR has been on an awesome uptrend. Then even CPB has also been on an awesome uptrend. Tom, it kind of looks like they're moving with like KHC.
Yeah, Campbell's actually looks almost just like a KHC or a Clorox or something just like it. Yeah, I love the setup actually. And this one's been kind of exploding. I mean, it's a little bit of a slower mover, so it went from 40 up to $46, but that's pretty good for Campbell's. And I will say that 40 support, that was like a triple bottom down there. Like, man, I wish I would have eyed this one up too. I probably would have made my own little fund and bought some Kraft, some Clorox, some Campbell's, some Nestle, just some of everything.
Yep. All right. All right, so we have Bravo saying, good morning, guys. I'm curious, are we going to a bear market? Should we raise some money in case of the same scenario to 2018? So, while no one can answer that for sure, I think we're already in a bear market with a lot of growth stocks already. Like growth stocks have literally crashed over the past couple of months. And I was reading an article, I think it was yesterday, that said like 50% of NASDAQ stocks are down at least like 35 or 40% from their highs. So like even the NASDAQ, like a powerhouse index, has a lot of its holdings just getting destroyed. So it's like I think we're already in a bear market in a certain sense. Like with the S&P 500, we're not in a bear market. Like that thing's still really close to its all-time high, but it's being propped up by the powerhouses like Apple, Amazon. Let me just go to the heat map really quickly. Apple, Microsoft, Google, NVIDIA, Amazon, Tesla. So like really the question is, if we see Microsoft and Apple and Amazon and Tesla and Google and NVIDIA fall or not, and I do think we're going to see that. So I do think that those major players will drag the market down, and that'll just kind of it'll just bring like a lot of like negative momentum into like the whole market environment.
Yeah, it will. And people, they really don't think that stocks like Apple sometimes and some of these different stocks can take some pretty bad dips, but kind of like what he pointed out in 2018, like Apple almost fell, they fell like a good like 30% there, and like they can fall some pretty good amounts sometimes. And we can see like even back after COVID, like whenever they recovered, they hit this like 140 resistance and pretty much went straight down towards like 105. So they can definitely have some pretty big moves. And like when I look at Apple here, if they end up falling below this major support coming up around like, you could say like 170, maybe even like 168, if they start to fall below that, I mean, I could see him falling down towards like this like 160 support, maybe like 158, somewhere down here. And that's even in the short term. Like in the longer term, I could see him possibly retesting that 140 support. I think 140 is going to be probably the bigger level. But, to be honest, it's just these big stocks, like they've been going down the past week, and that's why we've seen the SPY down. And I think if it continues, we'll definitely see the market keep going down. And as far as intraday today, it looks like SPY's kind of retesting this 460 support. Man, we'll have to see if it can hold this or not, because it's been pretty bloody. And if we fall below this in a major way, it's going to start selling off more, I think.
True that. All right, we have Bravo saying, why is IWM selling too? It has some good value stocks. Weird that they are selling IWM too. So yeah, it's just It is weird, and I know what you mean. Like there's just a lot of selling today, and we're even seeing selling on stocks that are historically move against the market. So, for example, like if we looked at Baba, right? This is actually a really good example. We can see over like the past, especially over the past year, it has basically moved down when the market goes up, and when the market goes down, Baba usually goes up. And today it tried to run up, but even that is getting rejected. So it just looks like across the board we're just seeing a ton of selling pressure, even if the stock, I guess you could say, quote unquote, should be rising. So it's just tough, and there's just like a lot of profit taking across multiple different industries and sectors.
Yeah, there really is. And like you said earlier, Mike, you were looking at a heat map. I went ahead and got one from FinViz here. We can see just about every stock today is in the red. It is just not looking good. I mean, there's a few stocks in the green. Like, of course, we have like Wells Fargo. It looks like the financial sector is actually, I would say, the best sector today besides beverages. I mean, of course, Coca-Cola and Pepsi are looking good. It looks like tobacco is even looking good. I'm not saying to go invest in that, but it looks like as far as like all these sectors go, the financials are holding up a little bit, or holding up the best today, in my opinion. And it's nice to even see like Verizon and AT&T doing decent.
Yeah, it's just definitely a change, because normally it's the other way around. Normally it's like, all right, AT&T is getting destroyed, Wells Fargo is getting destroyed, and Apple and tech and everything else is going up. But it's the exact opposite now. So in terms of opportunities, you could always play short-term puts on the stocks that are falling, and then, after they fall for a couple weeks, maybe you buy the dip and just hold long-term. And yeah, I mean, that's probably going to be the main move, just buying these solid companies at great prices over the next couple of weeks. And I think there's even good deals right now, like one with stocks, but even for crypto, Tom, like, yes, Bitcoin and Ethereum might fall a little bit lower, but like Bitcoin under 40K, I'll take it.
Yeah, I think it's a good time to start averaging in. I mean, personally, it's not my favorite. The whole crypto industry isn't my favorite overall, but I will say it's been pretty explosive over the past couple of years. And if it starts dipping down enough, I'll start averaging in too. And like you said before, Mike, like I cannot wait to sell puts on some of these cryptos. Like that's going to be a big advantage whenever it comes out, if it ever does come out. But hopefully it does pretty soon. And to be honest, like that would be such a good strategy, especially right now. Like, oh, I couldn't imagine the implied volatility right now. It'd be crazy.
Exactly. Alrighty, so then we have Bravo saying TNX going higher, TLT got smacked. How long this thing can go? Well, it can definitely go for a while. Rates move pretty slowly, but they normally are in a pretty strong trend. So honestly, I can definitely see it increasing. And then plus with the Feds, I guess you could say tapering, as well as some anticipated rate hikes over the coming years and months. Like that would definitely, you would think, make rates rise. So I can definitely see the trend continuing. In terms of like an exact duration, of course, no one knows, but the uptrend is looking pretty strong.
Yeah, and to be honest, like it's been going down quite a bit over the past few years. Obviously, whenever COVID happened, we can see on the chart here how the index failed, or how it fared and ended up falling off pretty bad. But it is coming back now. I will say, if the index can start to get back up towards like 25 or maybe 30, then we might start to like reach the top up there. But man, we're gonna have quite a long time before we get back up there. We can see it took a couple years to get to these lows down here, so it's probably going to take a couple years to get back up.
Yep. All right, and then we have Bravo saying how long TLT goes down. It's crazy overvalued. Well, it's falling now, and I can definitely see it continuing to fall. Bravo said also, besides, I would expect IWM to hold because it has value, but look at it, selling crazy. Yep, it's definitely taking a hit there. And then Bravo also said, I'm glad you guys suggested Visa to drop last week. I didn't add to my shares, which is great. I will add maybe when the market stabilized. Yeah, that's definitely a smart move right there. It looks like they have earnings coming up relatively soon as well. So It's a pretty smart idea. Visa's a solid company, and if it keeps on dropping, you could just think about it as a buying opportunity, especially for the long term.
Yeah, and I'll really like a company like Visa for the long term. Like they've been around forever. They're really established and they're definitely not going anywhere. So it should be pretty good. And I know Visa did have a hit with Amazon a while ago, Mike, where Amazon had taken away Visa payments from the UK apparently because of high fees. And hopefully Visa can start to change a little bit. I do know that their fees are kind of outrageous.
Yep, not as bad as Amex though.
It's not?
No, Amex is the top in terms of fees.
Wow, I didn't know that. I know that like Visa sometimes charges small businesses like, man, sometimes like 3% and stuff like that. I don't know what Amex charges, but that's crazy sometimes.
Yeah, I know what you mean though. Either way, I mean, Amazon doesn't want to put up with it either more. I can't talk today, gosh. Amazon's basically saying get their stuff together, but either way, Visa should be a solid company, and they're definitely taking a hit today along with other tech stocks. Looking at Amazon, Tom, I was actually looking at their chart over like the past year, and they really didn't move as much as like Apple or Microsoft or Nvidia or anything like that. Like it seems like for the most part, they've just been flat for the past year. So what are you thinking with Amazon?
Personally, I think we might start to finally see a bit of a sell-off here. Like, I'll be honest, Jeff Bezos, I think, stepped down at the top. I mean, I think he picked the right time. I don't know what's going on here, but I will say, though, that people have been talking about possibly, like, taxing Amazon more and, all this different stuff. And obviously their workers have been having some issues with, like, trying to, like, unionize and different stuff like that. So we'll have to see how the next couple of years go for Amazon. But yeah, looking at the chart, it's not looking good. There's a huge double top up here around 37.50. You almost can't get more defined than this double top. And at the same time as the double top, we're falling below this crazy trend line that we've been bouncing off of for a long time. And honestly, the way that we gap below that and we keep confirming off of it to the downside, like it's holding up very, very well. So I could see Amazon keep going lower, to be honest. I hate to say that, but it's not looking good. And honestly, I was hoping for a bit of a boost. You know what I mean? Like we just went through the holiday season and all of that stuff. So maybe their next earnings will be better than we think, but I don't know. The stock's definitely not forecasting it.
True that. Alrighty. And then we have Jay Deep saying Tilray is mooning. So I was just looking at Tilray and it's definitely taking off. I know it's up 16% now and it was up even more a couple minutes ago. But yeah, Tom, it looks like that hype's coming in.
Yeah, I'm so glad to see it with Tilray. It's been a long time since we finally saw this movement. I saw that I did see some good stuff about, they were creating a parent company called Tilray Brands, which is going to like manage all of their like subsidiaries, I guess, or manage all of their, smaller, smaller projects. But looking at it, I mean, that's going to be great for them. I'm glad to see them do this. It does say that the revenue is down 8%, but it's so great to see that, that their sales were 155.15 million, up from 129 million from last year. So that's good to see that they're growing a little bit. And honestly, like if we get some good like legalization bills or something like that come in, I think Tilray could start to really do very, very well. And I've seen some pretty big companies investing in a Tilray. Like I know that Anheuser-Busch, under ticker symbol BUD, has quite a big stake in Tilray, I believe. So hopefully they do pretty good.
There we go. Alrighty, and then we have Shelly saying, good morning, next levels for QQQ, please. So Tom, for the QQQ, what levels are you seeing?
Oh man, the QQQ is starting to really sell off here. I think I'm going to have to go to like a 180-day 4-hour chart to get these levels. Actually, we're about to test this 1,000 SMA, but yeah, we actually just fell through a pretty big support I had posted around 374. And since we broke that today, it's been pretty explosive to the downside still. The next major support I'm seeing here is going to be right around 370, and we're getting pretty close to it. We're also right on the 1,000 SMA. I'll be honest, I think that the QQQ is about done dropping today, but I could see it possibly going down to 370 and maybe testing this support a little bit. But like I said, it's down quite a bit, and man, I don't know how low we're going to go. Are we going to end up with like a 5% drop today? Like this is getting crazy.
Yeah, when it rains, it pours, and you know that the market takes the stairs up and the elevator down, and that's exactly what we're doing right now. Like it's Definitely struggling, and I just remember like back in March of 2020, like the market would be down like let's say I don't know, like 6% on the day, and you're like, all right, it has to be done for now. You're like, there's no way it can just fall like this, given that like the past week it's already down 15%, and then it'll just keep on going. And then like more sellers would come in, and then like it'd be like the market's halted, and it's just brutal. And the market, like when it's tanking down, like it moves in a completely different way than when it's rising to the upside because fear is so contagious. So like, I'm sure people who are holding, whether it's, I guess you could say Zoom or Boeing or Beyond or Square or anything, like people who are holding shares, they see this downward movement and then they're like, you know what? I'm just going to close out because everything's falling. And then short sellers jump in and it becomes a pretty volatile and violent environment. But yeah, the market's still trading lower. It looks like we're making a low of day like by the second on the QQQ.
Yeah, we really are. I mean, it's not good to see. Like you said, low of day by the second. Like on the 1 minute, we just keep going lower on both the QQQ and the SPY. I don't know what's happening here with these two indices. It's just the overall market, obviously, and it's not good to see. Once the SPY broke this 460 support, I should say, and it just started really tanking off. Like once we fell below 460, we pretty much went straight down towards like 458.50. It's just, man, it's not looking good. I'm wondering how low we're going to finally get before we have a bit of an uptrend. I know I was holding some puts actually from Friday. I ended up picking them up like right in the middle of the day sometime. A pretty risky play actually with the puts, and I ended up holding them over the weekend. And I normally never ever make a play like that, but the market was just looking pretty abysmal to me. And I'll be honest, I sold the put right at that 460 support, and it just kept going lower. And man, it's not looking good today. It just keeps bleeding off. And like you said, when it rains, it pours, Mike. And almost every stock on my watch list now is red, besides for Tilray, Clorox, Pepsi, Coca-Cola, AbbVie, Dominion Energy, and Kraft Heinz. Besides those 7 stocks, all the rest are red.
Not good. Not good. So with that being said, there are ways to hedge. So, if you're holding whatever stock, like I know as a lot of our viewers are options traders, like I know a lot of times people think like options trading, they instantly think like, day trading or credit spreads or something like that. But selling calls and like even buying protective puts is a good strategy in certain scenarios. So like, if you're holding shares of a company and you want to protect that position, it's okay to buy a put option. Like that will protect you in case this sell-off gets a lot worse than it already is. So it's like buying puts is not a bad strategy. And like Tom has pulled up, VXX, like if the market's tanking, this loves to fly up. Like the SPY right now is down 1.6%, but the VIX is up nearly 8%.
Yeah, that's crazy to see the VIX up that much. And sometimes people are, I will say the VIX is hard to trade. Sometimes people are they get pretty angry with the VIX sometimes because, it's so easy to buy in like right now at the top, and then the VIX might fall back down to 19 before rising up to 23 tomorrow. Like it's so volatile. And I really hope that, like if you're playing the VIX, definitely look at the timing of it. And to be honest, like shares of the VIX, I think are a better way to go than calls. Like a lot of times, like last week, for example, if you would have bought calls towards the end of the week, you would have gotten screwed pretty bad as that IV started to drop slightly and the VIX really didn't go anywhere. So that wouldn't have been good to end the week last week. But, obviously now that it's breaking out, it might be a pretty good time to get in with the momentum.
True. All right. So we have Bravo saying Amazon overvalued, in my opinion, needs to sell towards 2,500 to 2,800. So, yeah, I mean, it's looking like we're definitely moving in that direction. So maybe there might be a big opportunity there. And then Bravo said, is it better to stay cash better to stay cash in though or time in the market with this drop in stocks? I mean, keeping money on the sidelines, it's not smart to hold cash either. So, yeah, I know what you mean. I would say keeping cash on the sidelines is definitely the way to go right now. And just like seeing how everything plays out. And you could always average in, So there's a lot of great deals right now, and averaging in and having cash on the sidelines is definitely a great move to make. Then we have Keisha saying, what do you guys think of JD? JD. So JD's not. This one's not looking bad, Tom. Like, it's actually holding up very well compared to the rest of the market and even other China stocks. So I like it. With that being said, I do like Queb more, which is just a China ETF of like internet companies. So I do like JD, but I like Queb more, but they kind of move the same way. So they're very similar.
Yeah, and JD is actually moving very well today intraday. It's actually green 1.88%, looking pretty good actually. We can see it's kind of moving up above this $69 resistance today. It's now acting as a bit of an intraday support. Looks like it's having some pretty decent bounces. And I'll tell you, compared to everything else, it's looking pretty hot. Like if we go look at like BABA, they're down in the red today. They are starting to come back now, but JD definitely held up a little bit better, even better than Baidu, it looks like.
Yep. Then we have Bravo saying, how about buying a house? I mean, that's not bad either. I mean, rates are rising though, but
It might be good if you get in quick enough, but who knows? Like I know that the valuations of houses have been going crazy lately, but I know housing valuations, they generally don't tank off or anything like that either. So
yeah,
it should be a pretty good thing with housing. And to be honest, like Bravo, like how about buying a house then starting to rent it out? Like I've seen the rent prices get crazy lately.
True that. I mean, just one thing to keep in mind is like in the same way that I guess you could say falling rates helps the housing market, rising rates normally hurts the housing market. So that's just one thing to keep in mind. But obviously, there's a lot more that goes into it besides rates. But generally speaking, real estate's a pretty great investment over time. Then we have Mike saying, waiting for an Amazon split. It's actually a really good point. Like, I'm sure whenever they release that split, you'd think that the stock would go crazy, and that can definitely bring some momentum back into Amazon. So it's definitely a great point, Mike, and that should be a pretty big catalyst when it comes along. Then we have Bravo saying, a lot of the analysts think this year SPY gains only 6 to 7% total compared to 2021. And then he said IWM selling bad. So related to SPY, I can definitely see that. Over the past 2 years especially, we've just seen some absolutely crazy movement, right? And we've had a lot happen over the past couple of years. But one thing to keep in mind is like over the long term, I think the S&P 500 only averages like, what is it, maybe 8 or 9% every year.
Yeah.
So it's like when you see 30% up years or even like 20% up years or even 15%, like eventually the SPY is gonna like, it's gonna pull back to the point where it all averages out in the end, like around 8 to 9%, maybe 10%, something like that. It's just like, you know what I mean? So I can see it, Bravo, for sure.
Yeah, I could too. And like if we go look at from like the high of like the pre-COVID levels, I should say, if we go look at the pre-COVID levels to now, we're up like 35%. That's pretty good. And if we go all the way up to the highs, it was like 40%. That's pretty good. That's 20% averaged over the past 2 years. And that's not bad at all, to be honest. And even with the COVID drop, like we can see the market roared right back within just a few months, and we ended up being right back up above those levels. So it's almost like, COVID almost helped the market in a way. I hate to say that, but it honestly, it made some of these tech stocks kind of explode. And I think it honestly, like it was so drastic that people weren't expecting it to happen. And, like whenever everybody was stuck at home and all these tech stocks were going absolutely crazy, it just, I think, caught the market off guard. And, like we saw though, a lot of those tech stocks are now overvalued. And as they start to come down, we're going to see that SPY start to average out back towards that 8%, like Mike was saying.
In the pandemic, like it really helped some companies, but it absolutely destroyed other companies. Like obviously Apple and Amazon and Nvidia did very, very well. Because tech has such a large weighting into the major indices, like obviously the indices popped up, but some industries just got destroyed almost. Like, initially I think of like, I guess you could say some of the airlines or cruise lines even, and those are at least attempting to recover back, but like some of the other industries just, it's been bad. So it's been very interesting, and we're also seeing a lot of volatility right now. So I'm sure that we're going to see a lot of crazy movement over the next month or so.
Yeah, definitely. And like the thing that sucks is like these airlines and a lot of these industries that started tanking down it almost seems like that they weren't weighted enough like in the indices, like if the S&P 500, like I feel like that, like if the airlines had a little bit more weighting in those and in the Nasdaq and in everything like that, then it would have obviously made a bit more of a difference. But yeah, it's so weird to see the differences there. Like the airlines really did take a big hit, and they're still not even back to those highs. And what are some of these hotel stocks like Penn Gaming, Mike? Well, actually, they're doing pretty good, but they're just down so much over the past year. But there's a lot of industries like the hotel stocks and stuff that weren't doing good either.
Like LVS even. Like, let me...
Yeah, LVS is perfect example. I was trying to find one of those casino stocks that were down big like this. And yeah, LVS is the perfect example.
There we go. All right, so I'm just looking at some of the comments. So it looks like Bravo said, this sounds like 2018. Best stocks to stay in are banks and oil. The thing is, UVXY not greatly up. And then Bravo also mentioned, he said the whole drop in the market is due to TNX going high above 1.8. So yeah, rates rising does not help. He said he's worried about the same 2018 scenario when the Feds made the market bear for like 3 to 6 months. So I know what you mean. It's definitely possible. It's just like you would think that part of this Fed action would be priced in, at least to a certain extent, given that the Fed's been saying they were going to raise rates and taper for like the past couple of months, So it's like, you would think some of it's priced in, but I definitely see where you're coming from.
Yeah, and the thing that sucks is that Powell had kind of been saying for the past, now he's been changing his tone for the past month or two, like you said, but for a while there, like, he was coming out in these press conferences like just a few months ago saying the Feds are not raising rates, like we are not talking about raising rates. I remember there was so many articles saying like, Powell reiterates that the Fed will not raise rates and all this stuff. And, obviously it looks like he had to change his tone, but, in the end, like he was kind of keeping, I think, the prices from getting priced in too much, like I feel like that the price, like we might've seen the market start to fall a little bit earlier if Powell hadn't been such a good cheerleader and he hadn't been so optimistic about the market. I think he really did a good job keeping it up for as long as he did. But unfortunately, sometimes you have to let a little bit of correction happen or else you're going to see a major crash eventually. And we might be seeing it now. Who knows?
Yeah, we'll see. Tom, we wanted to secure that second term.
Oh, yeah, that's very true, Mike. Very true. That's probably has a big factor into what happened.
Yeah, because he's, once he realized he secured his second term, he's probably like, you know what, I can probably be more hawkish now. So we'll see. And then Vicky said the Fed has been saying for over 12 months when and how they would raise rates. No question about that. They have been saying that. But it looks like investors definitely weren't paying attention because the market's definitely pulling back now pretty hard too. So lots of interesting things going on right now. We have George saying LMT is green. So that'd be nice. It looks like LMT is green, and it's green a decent amount, and that's relieving to see.
Yeah, that is actually relieving. I know that, man, ever since like we pulled out of like Afghanistan and all that stuff, like Lockheed Martin has not been looking too hot, and I'm glad to see it kind of bounce off this 340 support again, looking pretty good. And yeah, I'm glad to see it. I really hope that this one can keep going up. Personally, I love this stock, and man, I wish I could play it for the longer term, but it hasn't been doing anything for the past few years. So hopefully it starts to finally break out.
Yep. So with that being said, we're going to get to the remaining questions. But I just want to welcome everyone to the stream. We've had a very busy morning, Tom. Lots of movement. So thank you guys all so much for joining. Welcome Hunter, Keisha, I'm Fierce, George, Jesse, Vicky, Mike, Johnny, Shelly, Kevin. Let's see. We got Bravo, J Deep. Let's see. Mike, we got Ravi. us, and yeah, I think that's everyone. So thank you guys so much for joining. We really appreciate all of you. And then we had Ravi asking Tom, saying time to add Fastly calls at current levels with the question mark. So Tom, what are you thinking?
FSLY, I mean, as far as calls, I'd be pretty careful with it. I will say if you're going to get some like longer term leap plays, or if you get something that has a lot of time, I think it could be really good to play. But personally, right now, Fastly's going down with a lot of these growth stocks. I think that they can come back maybe today or over the next couple days, but just keep in mind that with the options, personally, I would just rather get shares down here. Fastly's really, really cheap. They're only $31 a share. So, you can almost get 100 shares for around $3,000. And, you don't even have to get 100 shares if you don't want. But in the end, though, I feel like that Fastly, I like the stock. It's just that it's starting to fall below support, kind of like what we're seeing with Zoom and just a lot of these other growth stocks. I love it for shares, but I just don't know how much longer these are going to linger around here.
For sure. Then we have us saying, do you think we sell or keep? So I'm not sure which ticker you're referring to, but if you're referring to the market, I mean, I would expect the selling pressure to continue. I mean, we're falling off in a pretty decent way. And another thing to keep in mind is like looking at the market overall. Certain sectors are moving a lot different than other sectors. So for example, like tech and like Apple and Microsoft is selling off big time, but like George mentioned, like some of these other like value type plays like Lockheed Martin are holding up relatively well, and even Coca-Cola. So it's like the market, the different sectors move different, obviously. So for tech, I'm definitely expecting more selling pressure to continue. And then Vicky said, hit the like, guys. So yeah, if you guys like the stream, it would really mean a lot to us if you could hit the like button. We're going to wrap it up in a couple minutes. And then Vicky also said, people understand what they want to, and rates are going to be raised to 2019 levels, and gradually, how bad can that be? So good question there. Raymond said, PayPal bear put spread. Let's take a look at PayPal. Yeah, it doesn't look bad. IV's rising. It looks pretty good.
Yeah, PayPal's starting to really like fall off to the downside too. And I'm getting worried about them, Mike. It's looking pretty scary. They're going to be retesting this 175, 174 support pretty soon. And to be honest, this is a pretty major support. If they fall below this, I'm going to get pretty worried about them. And, PayPal does have a slight gap to fill on the daily chart from like 125 up to like 140. But man, I'm really hoping we don't get down to there.
With that being said, though, even if we do, it'll probably be a good longer-term play, don't you think?
Oh, 100%. It's just, the only reason I hate it is because if PayPal falls down to there, we're probably going to see DraftKings go way lower.
True.
We're going to see everything else go way lower, which it's not going to make me too angry in the end because I'm just holding shares and I'm just going to keep picking them up. But man, it's just going to suck to see the selling pressure start to accelerate as everybody starts to sell out of their shares. That's going to be the scary part whenever, like a lot of people are still holding their shares, but whenever we start to see the sell-off, it's going to be a bad time.
Gotcha. All right, so we have us saying, I have Apple and Netflix and Tesla and Snap. Should I sell them today or keep? I'm already losing 1,900. So if you're holding shares, you should be fine. I mean, they're solid companies, but if you're holding calls, then that's a completely different story and you might want to exit. So I'm not really sure what you're holding. So shares, you should be good, but calls, especially if they're short term, if I were you, I would probably cut losses. But then again, we don't really know what strikes or expirations or anything like that.
Yeah, that is a big issue. We always need those strikes and expirations so we can, fully gauge exactly what you're doing. But I would say if you have short-term calls, I would definitely exit them too. Like what Mike said, it's not looking good for a lot of these stocks. Like Netflix is really tanking down, let alone like Tesla is kind of still up at the top. And if they start to fall off, it's not going to be good for them. I know Snapchat is already super low. They're kind of in a setup kind of like PayPal or like Twitter, but it's just, they're all starting to like break these supports. It's not good if you have calls. Okay, he says he has shares, so that means it should be pretty good, I think, for the longer term. It's just, it depends where you're in at too. Like if you're in Snapchat up at $80, obviously it's not the smartest thing in the world, but I wouldn't sell out at this point though. You've been holding this long.
True. So I think you should be fine with shares, but then again, like it's it's like a longer term play. Like if you're looking to like close the position in a month, then then you might want to sell. But if you're willing to hold for the long term, you should be good. So
yeah, and Mike, I do find that a lot of people have an issue. I'm not saying this is in this case there's an issue with this, but I will say like as far as like longer term trades go and me helping people out a lot with them, a thing that I've been running into a lot, Mike, is a lot of people, they love longer term plays, but then like for example, they might use up most of their account balance on these longer term plays, and then they're trying to get into like some shorter term calls here and there. So then they're like selling out of some of their shares and then trying to buy them back. And, maybe then the shorter term calls and stuff might not go the way they want, and then they can't get back into the shares. And I don't know, I just wanted to hear your thoughts on that, because I am finding that a lot lately where people are getting shares, but then at the same time, they're selling out of them like within a month, and they're not really trading them long term like they're meant to be, because they're trying to free up that capital for something else.
Yeah, that's a good point. And another thing, Tom, is like fear is contagious. So like now that the market's tanking down today, you already know like we're gonna see all over everywhere that the market's tanking. You're gonna see some analysts saying we're on the brink of heading towards a deep and horrible recession, and you're gonna see all that bad news pop up, and that just causes more selling pressure, and then that makes the stock fall lower, and that causes even more selling pressure. So, a lot of it's just, even though it's tough, sometimes your best bet is to just ignore like some of the analysts and some things like that. If you have a solid company, and in this case, if you're holding shares, you should be fine for the long term, and you just gotta like stick with it. And think about it like this: like the people who made the greatest returns investing in like major stocks over the past couple of years, they probably bought during the peak amount of fear. So like March 2020, everyone was saying that the world's going to go into a global recession and maybe even a depression, and this is going to be the worst depression in the history of the world. And the people who did the best just bought and held. Even if they didn't buy at the bottom, they still bought and hold. So I think that's a huge thing to have, especially for long-term investing.
Yeah, I do too. That you really have to have that type of outlook for the future, and if you can just hold those for the longer term, you'll be very, very thankful probably. And I don't know what your average prices are, but to be honest, like I've been buying a ton of these growth stocks down here at the bottom. I know Snapchat, which you picked up, is lower than Netflix and Tesla, which is good. But in the end, like I've been picking up a lot of DraftKings, Corsair, lots of stocks like that. Even Intel, I've been picking up a little bit of. Just wanted to throw that one out there. Some Kraft too. And looking at it going forward, like I'm definitely going to be holding these for the longer term. Like Mike says, like, I know that going forward, like lots of people are probably going to get scared over the next couple of weeks as DraftKings breaks below these supports and it starts to maybe head towards $20 or anything like that. But really just have the I don't want to say capacity, like the mental strength to hold it. You just have to have that. Once you've been in the market long enough, you'll start to realize, like after a few years, you'll be like, man, if I just would have held some of these stocks, I probably could have done pretty good. Like in my case, I could have held AMD from $9, and man, I had like 10 or 12 grand of it at the beginning. Like, man, up to 129 now. I don't even want to know what that would be at.
True. All right, Tom, well, do you have any last minute plays before we wrap up the stream?
Man, I want to say that some of these chip stocks like AMD, they're not looking good today. I know it's coming back up a little bit now, but we might see them retest like this 130 resistance and then fall back down. So I'm definitely going to look for the market to keep going a little bit lower. Now, I will say the SPY has been pretty much straight down all day today. So at some point, we're going to see a bit of a recovery, and this might be the start of it. We might come up and retest 460 or somewhere like that, but I will say expect a bit of some upwards movement, at least intraday. But some of my favorite setups today, Mike, are honestly to the downside. Unfortunately, I was really watching AMD. Once they fell below 130, I really like them to the downside. And then unfortunately, some of these stocks like Run, ChargePoint, and stocks like that are starting to really get close and maybe break some of these supports.
Sounds good. So thank you guys so much for joining the stream today. There's a lot of volatility in the market, and that should definitely provide a lot of opportunities both for the short term and the long term. But with that being said, thank you guys so much for joining, and have an amazing rest of your day.